Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built. Right?
Okay, ladies and gentlemen, I'm placing stop on profit for Japanese yen at 106.840. Stop on profit at 106.840.
Hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 1% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing
It's
business.
quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, etc. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, this autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement at the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Yes, indeed, live from our Bloomberg Interactive Broker studio in New York, also live from my home in New Jersey, streaming on YouTube. It is Wednesday, August 12th, 2020. Carol Masser along with Alex Steele. She is in for Jason Kelly this week. And man, check out the markets because the equity march continuing on, approaching all-time highs in an across-the-board rally. So we're going to dig into those reasons why we continue to see that equity momentum. We're also going to take kind of a deep dive into the media world. Of course, we know about the passing of Sumner Redstone, so a lot to get to over the next 4 hours. First up, though, let's check on that bullish trade. Here is Charlie Pell.
Hi, thank you very much. Really quite a recovery, really, in the past 60 minutes or so. You look at the Bloomberg, pull up the GIP screen, looks like a giant W on there. We've got the Dow, the S&P, NASDAQ, all pushing higher. Technology shares helping push equities back toward records as investors snap up companies that have been beaten up lately during a rotation to value stocks. Gold is rebounding. Let's begin there. After yesterday's massive sell-off, we've got gold up 1.4% right now. Spot gold up $26 the ounce at $19.38. S&P 500 index approaching a record 3384 right now. The S&P up 51, up 1.5%. The Dow up 276 points, up by 1%, well off session lows. And NASDAQ up 250 points. That is a gain of 2.3%, bringing its year-to-date gains for 2020 to 23%. 10 years down 5/32, yield there 0.65%, and crude West Texas Intermediate now up 2.3% at $42.57 a barrel. I'm Charlie Pellet. That's your Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. I'm Carol Massar along with Alex Steele on this Wednesday, turning out to be another busy day here despite the dog days of summer, Alex.
I don't think we've had that since before the crisis. I said that exact same thing, and then it was the crisis, then the sovereign debt crisis, then the China devaluation, and then now we're in the middle of this.
Oh, God, so much to cover. We do want to remind everybody, Bloomberg Business Week brought to you by Commonwealth Financial Network. Be the independent advisor you've always wanted to be with all the support you need to get there. Visit commonwealth.com to learn more. So let's get into this trade. Let's set the Business Week agenda. Gina Martin-Adams with us, Chief Equity Strategist at Bloomberg Intelligence, on the phone from New Jersey. Also from New Jersey, Dave Wilson, our stocks editor at Bloomberg News. And Dave, just set the trade. As Charlie mentioned, we really have seen quite a bounce in the last hour or so.
Oh, no doubt about it. We're back at the highs of the day. If you look at the S&P 500, yesterday we were talking about how technology stocks were not at the forefront of the gains. In fact, they were trailing the market. Today, they are right there. Best performer among the 11 main industry groups in the S&P 500. In fact, 10 of the 11 are higher. Financial shares, the only exception as far as that goes. So, you put this all together, and we're really close to the S&P 500 breaking its record from February, and it's just a matter of a few points here or there that will dictate it. You look across the biggest companies, the big tech companies, if you like, call them what you will, all up at least 2%. Apple leading the way with a gain of 3.5%. So, Tesla really jumps out too, up 13% after deciding on a 5-for-1 stock split. That's the sort of thing that happened in the 1990s. When companies were splitting their shares left, right, and center.
Right.
And they're just not doing that anymore. And so Tesla really does, kind of look like a throwback with its stock performance today.
It's like with Apple and that stock split too. Hey, Gina, real quick on today. So the narrative was that we got higher producer prices and consumer prices over the last 2 days, and then we have a reflation/inflation scenario. Do you buy any of that?
That narrative to explain why value stocks got a little bit of rotation over the last couple of days, but today's trade is really driven by growth stocks again. So I think the bigger story is we broke out above those July 22nd highs, and it's been off to the races ever since. Where the market breaks through these sort of significant resistance levels, it looks for the next level of resistance, which is not until the most recent peaks. It's just sort of full steam ahead until we get back to those early 2020 highs, and then we'll probably test those highs. It's tough to say what's really driving the rotation. I do think the technicals are a lot of it, because from a fundamental perspective, there hasn't been a whole lot to hang your hat on. There's still a lot of concern about will they or won't they on the fiscal policy front. There's still a very uncertain landscape with respect to a vaccine. Certainly the Fed is not adding a ton of more firepower to this market. So I think it's more technically driven than anything else.
Except I do want to say on that last point, about the Fed, I do feel like, and I get people, messaging me or tweeting at me, and they're like, listen, if anything starts to fall apart, we know the Fed's going to be there. I mean, is that kind of a given, Gina?
Yeah, it is. I mean, there's an implied Fed put for sure, and that really changed this year, especially in comparison to the last several years when there was more focus, and back in 2017, 2018 in particular, recall, we were focused more on how much can the Fed tighten, which is a very different landscape than today, which is really just, okay, the Fed's going to remain loose for a very, very long period of time. But usually what you see is it's not just that Fed put. You've already priced in the idea that the Fed has accelerated the pace of liquidity provision to the market. You've already priced in the fact that rates are extremely low. You usually need to see incrementally more liquidity and incrementally more movement in rates to get really excited about stocks. Nonetheless, that's not the case today. We're still seeing stock prices rise, and the vast majority of the rise is driven by valuation expansion. So it's pretty clear to me that this is largely technically driven. That's not a bad thing.
Yeah.
It just is what to me is driving the market higher.
So, Dave Wilson, the value conversation, What's it going to? Sorry, go ahead.
Hang on one second.
Yeah.
I just want to mention, crossing the Bloomberg, President Trump weighing a replacement of Defense Secretary Mark Esper after the election. So again, a little bit of headlines, and not surprising, we see changes, right, in administrations potentially in a second term, sometimes in the first term, but nonetheless.
Sometimes multiple times in the first term.
Sometimes multiple times. That's for sure. Go ahead.
Value. So I was saying, Dave, if you take a look at the value trade, the conversation in the market, though, is that in order to have a sustained value rotation and a real move into small caps, you need a vaccine, full stop. You need a recovery. Is that true?
Well, there are certainly those strategists who will say so. I mean, we've seen, if you go back the last few months, I mean, occasionally you get these sort of 2 or 3 day moves in value stocks, and people think, oh, finally, the situation has changed, because value has been trailing really ever since the bull market began back in 2009. Well, we're looking at another move that's fizzled out just like the earlier ones have. And it's just a matter of, as long as those big tech companies kind of stay at the forefront of the market, it's like, there's sort of like a force field. Everything kind of ends up coming back to them in some level. And, the value stocks just haven't been able to compete.
All right, good stuff. And I know, Dave, your chart coming up takes a look at fear in the market, specifically looking at U.S. options. So looking forward to seeing what that has to say. Much more specific. All right, really appreciate it. Dave Wilson, our stocks editor at Bloomberg News, he will be back with his chart and stock of the day. And Gina Martin-Adams, always our thanks to her, chief equity strategist at Bloomberg Intelligence. We have a lot coming up, Alex. We're going to check in with the founder and CEO at Semaphore. He has some thoughts about underutilized labs for virus testing. He was really instrumental in helping out the state of Connecticut. So, I'm hearing this from different folks about we need more labs so we can do more testing.
Well, also, we talk a lot about the inequality of a vaccine, but it's also the inequality of testing. I had to have a procedure last week, and I got tested in 2 days, 3 days. I know people went to CityMD, and I've also been to CityMD, and it takes 17 days.
Yeah.
So, and that's free.
Right.
Or your insurance covers it. There's no copay. So, I mean, there's that angle too, and that's just going to make everything worse as we head towards that vaccine.
Yeah, exactly. Like, why do we have such a big gap? We're also going to do a mega dose of media news. Of course, talk about Sumner Redstone. We're going to check in with the founder and CEO of the Impact Network, and also with the CEO of Kisui on streaming events, which is really kind of interesting. And let's not forget, we have Lyft earnings after the close. I'm going to quickly do the bite because it's kind of interesting. The bite of the day, one number that tells us a lot. It's 87.5 million. The Rock, Dwayne "The Rock" Johnson, topping Forbes' list of the highest paid actors of 2020 for the second year in a row. Alex making 87.5 million. Thanks in large part to Netflix. Not too shabby, right?
I love The Rock.
What's not to love? There's a lot of him to love. No, it's out there, girl. It's out there to the world. All right, let's get to world and national news headlines. Let's check in with Nancy Lyons. Hi, Nancy.
Hey, Carol. Joe Biden and Kamala Harris this afternoon will be holding their first joint news conference as the Democratic ticket for the presidential election. The campaign wasted no time posting an ad featuring Harris.
America is in crisis, and I know Joe Biden will lead us out of it. He's a man of faith, decency, and character.
Biden's selection of Harris as his running mate capped a months-long process. He started with a list of roughly 20 contenders, including governors, senators, mayors, House members, and other Democratic leaders. In the final days before his decision, he spoke with 11 finalists for the position, and they were vetted by 12 to 15 lawyers who looked at everything from personal finances to past romances. Well, the Trump administration is taking aim at bathrooms in its latest deregulatory move. Bloomberg's Nathan Hager reports.
It's something President Trump has complained about a lot at his rallies.
You go into the shower, right? You turn on the water, drip, drip.
Now the Energy Department is proposing to change the definition of shower head so manufacturers can get past a 2.5 gallon a minute maximum flow rate by letting multiple shower heads meet that requirement. The environmental group Appliance Standards Awareness Project says if finalized, the rule would waste enormous amounts of water and increase greenhouse gas emissions. Nathan Hager, Bloomberg Radio.
Well, coronavirus is having an effect now on the Masters. Augusta National says there will be no spectators this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Right, and can't tell if the golfers might like that. It's a little bit quieter on the courses. Hey, let's get to our top news story out of D.C., certainly at this hour. President Trump privately saying that he intends to replace Secretary of Defense Mark Esper after the November election. This is according to people familiar with internal discussions. Our Jennifer Jacobs putting out that story. Let's check in with Larry Liebert. He's national security editor here at Bloomberg, and he joins us on the phone from D.C. Larry, good to have you here with Alex and myself. What do you make of this news?
Well, it's significant because a president, if he's reelected in the case of Donald Trump, often makes changes in the second term at the start of that term. But it's clear that dissatisfaction runs deep for Esper in the White House. As Jennifer reported, the president has privately said he'd replace him after the November election. He wouldn't wait longer. And not coincidentally, perhaps, Esper has told people that he plans to leave then. So not a very happy situation for the defense secretary. The president has looked for someone who would be his kind of defense secretary and follow his lead, including his political instincts. And he hasn't had it till now, in part for a good while. He had General Mattis, who he praised at the start, but who resisted him and ultimately quit. Now in Esper, who has defense experience, but most recently as a industry lobbyist, he is someone who's tried to get along and go along, but ultimately disagreed publicly over the Black Lives Matter protests and the question of whether to call in active duty troops, which Esper went public in resisting. That was really the breaking point after some other conflicts.
Which brings up the whole loyalty thing. Like, what we know about the Trump administration is that if you are loyal, you are rewarded. If you are not, then you're not. Who's out there who could take this spot, who could be considered loyal but also hold this position?
Well, that's a real question because the president has initially, it was my generals. He loved my generals. Well, he's not willing to let them go their way, and he's had even some recent problems. His nominee for the number 3 job at the Pentagon, Brigadier General Anthony Tata, who had been on Fox News and often and had talked tough. But it also had controversy, including derogatory remarks about Islam and Barack Obama. He could not get through the confirmation process, so they've given him a secondary job. So when you're offering that kind of controversial ex-military or military type, it's not clear who the president could get through. Now, it's possible he could get a senator who has defense experience. And the Senate tends to accept that. But again, would it be someone who would toe the line for the president?
Hey, Larry, I find the timing interesting. I mean, the president could have just waited until after November to do this. But so does he expect to get some political momentum out of this?
I don't think so. I think the president, though, I guess to his credit, he speaks his mind to all those around him. I don't think this is the White House determined to send a signal on this. I think this is what the president actually intends to do with an announcement coming later. I could be wrong in that, but I don't think there's a huge constituency, even among the president's supporters, that this guy Esper has been anti-Trump. He has made some decisions that the president didn't like, the president's supporters don't like, not only on the active duty troops, but other cases where he felt he had to defend the military and the military's relative independence there. He spoke out on Black Lives Matter in favor of that sentiment. He has banned Confederate flags on bases and at least suggested some support for renaming bases that have Confederate names, which the president very much opposes. So there's been a number of issues there where they have differed, but I don't think that's made Esper a big enemy to the general band of Trump supporters.
Larry, really good to chat with you about that. Larry Liebert, Bloomberg National Security Editor, on Mr. Esper supposedly saying he's going to leave. Trump saying he's not going to, if he gets reelected, he's going to give him the boot. So all of that in there. But I thought, Carol, your point about why now was a good one. Like, are we going to have more conversations about use of troops in the country, and that's why it's out there? But you raise a super valid question, I think, with that.
Yeah, the timing is kind of interesting. So, but again, this is a year, and certainly a political year, that's very interesting. All right, let's get back to the world of business. Check in with the Bloomberg Business News Flash from Charlie Pell.
All right, I thank you very much, Carol Massar, and thank you, Alex. Here's what's going on. U.S. stocks holding close to session highs right now. Let's get right to the numbers. I'll give you the story in a moment. S&P up now by 48, higher by 1.5%, bringing the S&P's year-to-date gain now to 4.7%. The Dow is up 261 points, also close to session highs, up 0.9%. NASDAQ keeps on going. NASDAQ Composite Index now at 11,026. It is up 244 points right now. That is a gain of 2.3%. In the year-to-date column, up by 23%. 10-year down 4/30 seconds with a yield of 0.65%. Gold up 1.3%. 19.35 the ounce. And West Texas Intermediate crude up 2.7%. 42.72 a barrel. Technology shares helping push equities back toward records as investors snap up companies that have been beaten up lately during a rotation to value stocks. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. Well, we know that the world is in a race for a vaccine for COVID-19, more likely several vaccines. But in the meantime, testing and tracing are key to keeping coronavirus in check, and especially when we talk about reopening.
Position closed on Japanese yen. 200 pounds in profit.
Founder and CEO at Sema4. It's a patient-centric predictive health company. He's also Dean for Precision Medicine and Mount Sinai Professor in Predictive Health and Computational Biology. He's really smart, Alex. At the Icahn School of Medicine at Mount Sinai. He joins us once again on the phone in Connecticut. Eric, it's good to have you back with us. Tell us a little bit about testing and tracing, right? We keep hearing how important this is, but as Alex said at the top of the show, she recently had to go in for a procedure, got her test done, got the results back pretty quickly, but she, and I've seen this too, other people taking tests, and it takes forever to get the results back.
Yeah, so there's, a lot of testing capacity out there. I think it all comes down to logistics and who, has the right kind of partnerships with the different systems to kind of leverage capacity beyond one lab. There's no single lab that can handle all of the capacity that's coming, right? We have these fluctuations and episodes of intense outbreaks where the testing demand gets super high. And so it's logistical, really, the ability to manage and leverage multiple partners to be able to leverage the capacity that's available.
Without getting too political, I mean, President Trump talks a lot about how we have the best testing system in the world, and we've really done a good job with testing. So what is he talking about? Like, where do we do well, and then where do we need to do better?
So the technological side of the testing, being able to provide highly sensitive, very specific, very accurate tests, the technologies those are based on, the ability to automate those technologies, like we do lead in that arena. I think where we fall down and would not say we're the best, in the world, would be, again, on this logistics side, the ability to manage huge patient flows, the collection of samples, the sending of those samples into the major labs to get them processed. Like, that requires more of a centralized infrastructure that a few big labs have, but they're overwhelmed and can't meet the demand.
Well, as we all said at the beginning, too, and we heard this from a lot of our guests early on, and it was all about kind of a war effort. Like, we needed to think about getting ahead of this as if we were fighting. I mean, we were fighting. It was a health war. But, I mean, that's something, Eric, we kind of needed to do and really have federal involvement, a national strategy, but we didn't have it. And it sounds like that's what you're talking about.
100%. And the scale of testing is something no lab in the country has had to undertake in the history of the U.S. The ability to run many hundreds of thousands into the millions of tests a day. That's just a scale we've never had to face before. So the kind of infrastructure you need to accommodate that, the coordination within the government, within the private lab world, that's just not something that existed.
So talk to us about your own personal ramp up that you guys did at Semaphore, because you got involved with this pretty quickly. And it wasn't what you were set up to do initially, right?
Right. It definitely, we're a state-of-the-art, next generation sequencing lab and intelligence company. So we have, again, familiarity with the technology and the automation. So that part was easy. So what we were able to do quickly was stand that technology up, run it through a CLIA-certified lab, and demonstrate the ability to get highly accurate and quick turnaround results. But like everybody else, we faced, from the crunch on availability of reagents and test kits to the logistics of getting samples to flow through in a very seamless way. Those are some of the obstacles we had to overcome. And of course, partnered with the state of Connecticut and a lot of their resources around, bringing in groups like the National Guard to help and so on. So it was an interesting effort.
That was a nice way of putting that. So you brought it up, sort of the huge effort. What about financial cost for that? Because it's great to want to change how we do stuff but I feel like it's always going to come down to dollars and cents.
Yeah, the cost definitely plays a big role. How accommodated you want to be in the test. We do have the ability to test in the home to do, through saliva collection and anterior nary swabbing of the nose and so on. But those kits cost money. The shipping of those kits in a timely way costs money. The running of the test costs money. And the software to support how you can manage large flows of individuals, like consider back to work or back to school programs, where those systems, they don't need just a test that they can flip, right? Because they're not accustomed to testing everybody that way in say a school or a business. They need help managing that, both managing who's eligible for testing, what are their results, are they eligible to come back into the workplace or the school, so there's a lot of, again, of infrastructure needed, and so the cost varies widely depending on, are you just running a test that somebody's provided you the sample, or are you managing the entire flow? That's why you see
No, please finish. No, please finish.
That's why you see the wide variability in the cost and the accessibility to those kinds of services.
I mean, what do we need realistically in this country to be able to doing the testing that's kind of demanded for a comfortable or more comfortable reopening? And we've just got about a minute. We're going to do some news and then we'll come back, Eric.
I think it's you need very large scale, very low cost sample collection methods, and there are a number of very significant efforts underway, funded by the Gates Foundation and the National Institutes of Health. Like, how do we, for very low cost, enable samples to be collected in a home environment, not have to be medically observed? Like, that's a big obstacle that is being overcome. And then I think it's all about, how do you enable labs to handle hundreds of thousands of samples coming in a day? Again, that's just like a logistical. Think if you're sitting in a warehouse and hundreds of thousands of these samples are coming at you. They have to be very carefully managed and tracked and so on. Yeah.
That's what I wanted to get to. So you're talking about a lab, an individual lab being able to handle about hundreds of thousands of tests a day. I mean, that's the levels that we're talking about, which is just kind of hard, Alex, to kind of get your head around. That's a lot of testing.
Well, I'm just all creeped out when I had to do the test myself.
Did you do the nose one?
Yeah, I've had 3 COVID tests, and 2 they do it for you, and the first one you do it for myself. And I was like, I don't think is this right?
Did I go far enough?
I don't want to die. Is it right?
Alex, you're extraordinaire. You're an anchor. You're a test taker, test administrator.
I got lots of range.
Oh my God. We're going to continue with Dr. Eric Schott, founder and CEO at Semaphore, when we continue right here on Bloomberg Business Week. Carol Massar, Alex Steele. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. Bloomberg Business Week. It is Wednesday. Had to check the calendar, remember where I was, who I am, and what
Time
date
has
it is.
no meaning anymore.
Don't say that. Don't say that. Carol Massar, along with Alex Steele, we're going to get back to our conversation with Dr. Eric Schott, founder and CEO at Semaphore. In the meantime, back to your top business stories. Another check on that trading day. Here is Charlie Bell.
All right, thank you very much. Higher across the board, this headline from the Bloomberg Professional Service. Sources tell Bloomberg Airbnb reported tumbling revenue and mounting losses in the second quarter, but the home sharing startup is still eyeing a stock market debut before the end of the year. People who didn't want to be named say revenue dropped to $335 million in the period ending June 30th. That is down at least 67% from the more than $1 billion the company reported in the same period last year. It is a shift that reflects the magnitude of the impact of the coronavirus pandemic on global travel. Speaking of which, Moderna has reached a deal with the Trump administration to supply 100 million doses of its experimental vaccine for COVID-19, the latest in a string of supply agreements that the U.S. has reached to stockpile the most advanced vaccines in testing. Moderna shares, they're up right now by 2.2%. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television this morning, she told us she does not see it happening quickly.
We have a decent amount of ways to go before we have a vaccine that's ready for everyone. The Moderna announcement yesterday is definitely an exciting step forward with plans with I think it's a $1.5 billion deal with the U.S. for plans to make about 100 million doses, which is fantastic, but they still need to clear that phase.
New order placed for euro at short at 117 to 9. Sorry, it's already executed. 917, 9 to 6. Okay, we sold short Euro USD at 117, 9 to 6.
Employees. Uber shares down 1.2%. Lyft, which reports after the bell today, up now by 0.2%. Equities higher across the board with the Dow, the S&P, NASDAQ all advancing. S&P 500 index up 49 points. That is a gain right now of just about 1.5%. We've got NASDAQ up another 241 points, up 2.2%. The Dow is up 1%, up now by 272 points. 10-year down 6/32 with a yield of 0.66%. Gold up 1.2%, 19.34 the ounce. West Texas Intermediate crude up 2.7% today, now at 42.74 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you very much. Yeah, 5-month high for oil. Go figure. All right, we have more now with Dr. Eric Schott. He is the founder and CEO of Semaphore. Doctor, you also run a business. You had to deal with the business during the pandemic. How did you keep people motivated? How did you do it? What did you learn?
Well, I think, first of all, we're on a cool mission at Semaphore. Like, it is about how do we better enable patients and physicians to make better decisions around their care. We, of course, had to stay in full operation while this was going on because we provide standard of care services and done the COVID testing. So it was like putting in place the right kinds of protections, enabling employees to feel safe. The labs went to alternating shifts where, we had a chance to clean between shifts, and if one shift got infected, we, had another shift that could pick up the ball. So it was a lot of, again, logistical maneuvering and putting in place the right protections. And we, started doing testing as well on the employees and, symptom tracking and so on to, just be as protected as possible.
I am curious too, Dr. Schott, from your channels also at the Icahn School of Medicine at Mount Sinai and just the folks that you're talking with in your industry and the medical community at large, how do you see 2021 playing out? Do you have any visibility, and what are your expectations?
Yeah, it's a one of those tough.
He laughs at you, basically,
predicting
Carol.
the future and something we've never.
We don't have any
encountered
visibility, so
before.
we're just asking everybody else for it.
Right. Yeah, it's a tough one. I think the testing will get under more control. Will play out whether the antibodies are predictive for immunity. Some vaccines hopefully will roll onto the scene. Like, I think what we'll see is increasingly better management, better protection, allowing a more relaxed stance given those better protections. So I see things getting more back to normal into 2021. But definitely don't see this disappearing. I think it's going to stick with us for a while, and it's going to really be our ability to better manage it and return to as normal a stance as possible.
Well, I'm glad that you mentioned that, because I've been back at work for, I think this is my 5th week. And in the beginning when I came back, it was really jarring. And then I got all my systems in place, like when to sanitize, when to wipe stuff down, and then it feels okay. And as I mentioned earlier, I had a test last week and I'm negative. I mean, is this what we're all kind of in for? Like, we all just have to kind of bite the bullet, kind of get back in gear, and then we realize it's going to be okay and the protocols that we've been taking are working?
I think that's exactly right. Like, the evidence will build that those kind of protections are working and do prevent spread and new infections, and they're not so onerous, and they do enable us to get back into a somewhat normal stance and have more face-to-face contact. We are human beings. Where I don't think we were intended to live in a completely digital world, so I think it is important to get back to that kind of level. In the back-to-work programs we're helping manage, we see exactly what you mentioned. Like, if you follow those kind of protocols, like, you can be really well protected. It works.
Well, and that's what's interesting, because you are working with corporations on back-to-work testing and also with schools and colleges. So are you anticipating that that's, like, as Alex said, that testing becomes more the norm, that we're all going to be doing it kind of on a regular basis, or maybe doing it for ourselves? I mean, is that what's going to be in 2021 as well? Just quickly, just got about a minute left.
Yeah, I think absolutely. I think testing is going to become a very critical component going forward, but it's a necessary component, but not sufficient. I think a lot of the kind of symptom tracking, how people are feeling, even some degree of contact tracing, all of that combined will provide a robust solution. Like, we will enter the era of surveillance kind of testing. Like, that will, I believe, be here to stay.
That's like people knocking on our doors, being like, "Are you home?"
I don't think people knocking on your doors. I think it's surveillance from the standpoint of, are you infected? Is the virus spreading through communities? Like, because if it is, we can take extra protective steps to slow it or prevent it.
Yeah, it's definitely a different New World Order. Eric, thank you so much. Really appreciate checking in with you again. Dr. Eric Schott, he's founder and CEO at Semaphore, joining us on the phone from Stamford, Connecticut. Have you signed up for the app? Are you on Apple that that you can do contact tracing?
No, I have not done
There's
that.
actually, if you go into systems on Apple, you can kind of be part of it. I haven't done it either, though, because it's like, am I ready to do that?
I don't know. I don't know. That's a good question. That feels like a real step.
Yeah,
privacy.
A really big step. All right. But definitely, as we heard from Eric, it's going to be different. Let's get back to World and National News headlines. Back on over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, they are a team now, Joe Biden and Kamala Harris. They'll be speaking in Wilmington, Delaware this afternoon at their first joint event as the Democratic ticket for the presidential election. California Congressman Ted Lieu tells Bloomberg she's a great pick.
She is a former prosecutor. She ran the largest legal operation in the world as Attorney General of California. And as U.S. Senator, she has introduced groundbreaking legislation. She's a perfect candidate to be vice president.
Well, one of the finalists to be Biden's running mate was former National Security Advisor Susan Rice. She told NBC's Today Show, "We can certainly expect to see Republicans and President Trump slam the ticket."
There will be those that employ racism and sexism. Look at Donald Trump yesterday, calling her nasty. He would have done that to any person that Joe Biden selected on the ticket. And that's the undertone.
President Trump has privately said he intends to replace Secretary of Defense Mark Esper after the November election. People familiar with the discussions tell Bloomberg Trump has been frustrated Esper has not done more to publicly defend him on key issues. Secretary of State Mike Pompeo is calling upon young democracies in Central and Eastern Europe to embrace their hard-won freedoms as they face threats from Russia and China. He spoke today in Prague.
In your country alone, we see
influence campaigns against your politicians and your security forces. We see the theft of industrial data that you have created through your innovation and creativity.
Pompeo warned the checks to stick with U.S. suppliers, not authoritarian regimes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Alex Steele. I feel like I cannot talk enough about school reopenings. I don't know how you feel about it. I know it sounds like you're very conflicted.
Yeah, no, I definitely can talk about this like all day long. And there is a really staggering chart in an article in a Bloomberg terminal that says, look, the two things that schools need are in short supply, and that is staff and cash. Layoffs are mounting. Jobs are disappearing. People are actually moving out of the state. I have anecdotally a friend who's a public school teacher in Brooklyn. 3 of her top teachers left, and budgets are shrinking at the same time. I don't know how you have enough money to do any kind of preparation for kids coming back.
Well, and this is one of the things that we've been, doing some stuff with even my daughter's school, like what they're talking about and creating these pods so that kids are not moving around classrooms, and so that you basically have, one group that stays together. But as a result of that and trying to keep committed to smaller class sizes, that you do need more faculty in order to do that. And I think this is going to be really tough. Listen, Alex, right? I feel like every day there's a story about teachers saying, you know what? I know I have a sister-in-law who, was getting near retirement anyway, but I think is kind of like, I'm done. I just can't expose myself, to the virus and around kids who we know increasingly are carriers of the virus.
Yeah, and we have, I guess there was a number crunching here that said that average school district faces $1.8 million bill to reopen. No one has that money to do that. And to your point, you saw the governor of New Jersey, Phil Murphy, sort of cave to that and say that kids could work remotely. Initially, he was like, they all have to be back in school, but the teachers union put pressure, and now they can stay home.
Right, exactly. I mean, that's the other thing, that it's really kind of confusing, I feel like, for parents and trying to figure out the right thing to do. Another number in this story, about $1 million to just buy protective equipment for staff and students at one school. And then you've got, as you've been saying, states, the aid is just not there because of the economic and virus downturn. And so the kind of money that would normally flow to these schools is not going to be there. So I kind of can't wait till it's like 2023. I'm thinking.
Get that time machine.
I'm working on it. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Technology shares helping push equities back toward records as investors snap up companies that have been beaten up badly lately during a rotation to value stocks. Gold is rebounding. Let's begin there. What a turnaround from yesterday. We've got gold higher now by $21 the ounce, up 1.1%, now at $19.32, still below that $2,000 level. West Texas Intermediate crude is up 2.7%, rallying by $1.11 a barrel right now, $42.72 for a barrel of WTI. The 10-year down 8/30 seconds with a yield right now of 0.66%. Equities higher across the board. S&P 500 index up now by 48 points, up by just about 1.5%. We've got the Dow Jones Industrial Average up 282 points now. The Dow higher by 1%, making a run for the best level of the day. NASDAQ surging 239 points. That's a gain of 2.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Alex Steele. We've got a special vaccine issue this week. It's all about how we got here, the science, manufacturing, politics, and persuasion that might just end the pandemic. It is called the vaccine issue. And there's a really interesting story, a disturbing one, too, about how vaccine nationalism is making this deadly disease even worse. Let's get into this story. Vernon Silver, Projects and Investigations reporter at Bloomberg News. He joins us on the phone from Rome. He wrote it. And also with us is the editor of the magazine, Joel Weber, on the phone from Massachusetts. Joel, you know, just when you think this story can't get any worse, you do think about the nationalistic issues of this virus.
That's right. And, you know, again, one of the defining elements of this issue was to sort of take this idea of a vaccine and look at it from as many different ways and angles as we could think of. And it wasn't just about the sort of the horse race, if you will, of trying to make this thing. And as much as that's an important part, it also there's plenty of other components. And the political one is obviously an especially important dimension here. And when Vernon sort of raised his hand about this idea, I think it got to a deeper place because what we're seeing is countries really having this, in general, just this resurgence of nationalism. And that's now manifesting itself around how they're approaching the vaccine. And as countries are digging their heels in to sort of do everything by themselves, it actually makes the whole situation worse because through collaboration, we might have been able to pool resources and maybe reach a cure or a vaccine quicker than we otherwise might and benefit more people. And what I think Vernon really found that was so interesting was being in Rome, you know, which was one of the first places affected by the pandemic. It really felt like Italy was at sort of the forefront of this conversation. So Vernon, what was the Italian perspective on all of this?
I mean, what we did was started following the vials, literally, of how the vaccine were being produced. And the first strand came in just 10 little vials that were sent from Oxford to Rome to this company that was going to make over 10,000 doses for the trials, the very first large-scale trials of a vaccine in the world. And by happenstance, the initial supply of that vaccine was within the borders of Italy, and the politicians here latched onto it, and it kind of steamed. You know, it was a snowball where you had more deals being made and more kind of nationalist rhetoric coming out of the mouths of the leaders here, who needed a redemption from having been the worst hit at the outset. And the end result is that we've got about a quarter of the supply of the AstraZeneca Oxford vaccine now being bottled within Italy's borders, and how it plays out in the end is one of the questions that's been left open as they balance, let's all cooperate with, well, we do have it here.
Well, I'm glad you brought that part up, because I was wondering what the nationalism part means. Does it mean that you provide the money to the company to make the vaccine, that you then buy all the vaccine? Does it have to be a local company that's making the vaccine? Or is it the distribution, like the vials and the manufacturing part? Like, there are lots of different angles to it.
Yeah, and the best way to understand it is it breaks down into two areas: the bad actors and the bad planners. And the bad actors are, the accusations against the Chinese and Russian governments that they've been hacking the Western efforts. The bad actors are, we already saw it in March when protective equipment was being blocked by different countries. 90 different countries blocked equipment that would have been of use during the pandemic. Those are the bad actors, and we kind of know about those. And then the bad planners is sort of just the splintering of where, are you going to throw a lot of money at it? The Trump administration is throwing $10 billion at this Operation Warp Speed. That sucks up supply. Poorer countries then, are trying to pull money to buy their own supplies. That drives up prices. And these companies that are trying to, save the world and also make some money are trying to find solutions. And AstraZeneca was a great example because they've decided they need to fight the nationalism by creating these supply chains on 4 different continents. If everyone's going to fight over it, give everyone their own darn supply chain. So Russia has a supply chain of the Oxford vaccine, and Brazil will have one. And there's the one in Italy, and there's 1 billion doses being made in India.
So, okay, best laid plans, right? We create vaccine or vaccines, and the world has equal access to it. And then there's reality. Is there, Vernon, the possibility, the likelihood that we're going to see people ordering the vaccine, but then there's going to be countries who are not going to let it cross their borders?
Yeah, absolutely. That's what the companies are planning for. That's what the governments are planning for. That's why you try to get a clear idea of how these orders are, who goes first. When the UK said, it's been developed at Oxford, we're going to get the first doses for our people. How does that play out in the end? And that's sort of what we're looking at next, is that borders have become the battle lines in this nationalism of the vaccines.
Hey, Vernon, the other thing that you said in here was something about poor countries. And I just want to bring that out here because for basically everything that we're looking at here, we're basically talking about rich nations that have the ability to actually have the science and manufacturing in place. Is this yet another example of sort of this ongoing conversation that we have about inequality and here we have some countries with many people who will actually have access to something first, while probably a greater portion of the world has nothing.
Yeah, absolutely. I mean, across the board from the beginning, this pandemic has exposed and exacerbated inequality of all types. And we're going to see in the coming months as the vaccines, and there are tons of them, as they roll out, that there will be huge inequalities, and everybody will get hurt by that because the fact is that these viruses don't know borders. So if the UK or the US or China hoards their own supply, well, somebody in the poorer parts of the world is going to not get it, and that just, if there were some magic way to get everyone to spread it around at the same time for the people who most needed it, healthcare workers, the vulnerable, then we'd be out of this mess a lot quicker. But that's not what's happening.
Yeah, and I do wonder too, because especially in these emerging markets, it's where you're seeing some of the early testing of the vaccine happening, and it would be kind of ironic, unfair. I don't even know what other words to use about it if ultimately these countries then don't have access to the vaccine when it's finally confirmed. So it's a deep, deep read. The coverage in the magazine about the race for a vaccine, as Joel said, it's not just about the horse race, but about so many other issues such as vaccine nationalism. So it's a must read, Alex.
Yeah, I think we saw that with HIV in Africa. That
right?
That's where they did all the early testing, and that's where you're going to run into some problems.
Yeah, exactly. I feel like, man, there's just so many different facets to this story and so much more to come. Our thanks to Joel Weber, editor of Bloomberg Businessweek, on the phone from Massachusetts. Vernon Silva, great reporting always. Projects and investigations reporter at Bloomberg News, has been watching this virus firsthand from Italy and joining us on the phone from Rome on this Wednesday. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, August 12th. The Dow, the S&P, NASDAQ are all advancing. S&P 500 index now at the high of the day. Stocks are approaching the record reached before the coronavirus pandemic, propelled by surging tech shares. Gold is rebounding, the dollar weakening. Treasury yields now at 5-week highs. We've got the 10-year, the yield there, 0.66%, down 8/30 seconds. The S&P's up 50 points. That is a gain of 1.5%. Dow Industrials up 306 points, up 1.1%. And NASDAQ is up 236 points, a gain there of 2.2%. Gold up 0.9%, 19.29 the ounce. And West Texas Intermediate crude up 2.7%, now at 42.73 for a barrel of WTI. Federal Reserve Bank of Boston President Eric Rosengren has offered a downbeat outlook for the U.S. economy, emphasizing that recovery depends on controlling the coronavirus, and many states are failing in this mission. In a speech to the South Shore Chamber of Commerce in Massachusetts, Rosengren said, quote, limited or inconsistent efforts by states to control the virus based on public health guidance are not only placing citizens at unnecessary risk of severe illness and possible death, but also likely to prolong the economic downturn. Inflation is rising. The Consumer Price Index was up 0.6% in July for the second month in a row. The initial shock of the coronavirus scuttled demand. As for inflation, Emily Rowland is head of capital markets research at JH Investments. She was interviewed this morning on Bloomberg Television.
We're just not going to see that traditional sort of overheating in an economy that you start to see coming out of a recession. We still have a 10% unemployment rate. We still have a massive demand hit from COVID-19. And yes, we're printing money here in the U.S., but we haven't really seen that velocity of money actually enter the system yet. So we think that we're in for a disinflationary environment, which really does have some key implications across our asset class views.
And recapping now, we've got the Dow, the S&P, NASDAQ all higher. S&P up 50, up 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Happy Wednesday, everybody. I'm Alex Steele in for Jason Kelly alongside Carol Masser. In today's Business Week Economics segment, we're going to be talking about taxes, but no, it's not boring because they may or may not work. We're joined now by congressional tax reporter Laura Davison. She joins us from Washington, D.C. Laura, the president has proposed a bunch of stuff, and it all kind of boils down to, in some ways, cutting taxes. Is that really what we're in store for here?
Well, probably not, because the president can't cut taxes by himself. He needs Congress to do that, and Congress is not really on board with a big, broad-based tax cut, and they have a bunch of other problems that they're trying to figure out with negotiating a stimulus bill. So the president has talked about a couple different things. One, he's talked about cutting capital gains taxes, which is something he could potentially do through an executive order, but both Larry Kudlow and Stephen Mnuchin said today that they're not looking at that. The other thing he did was, over the weekend, he delayed some payroll taxes, but those tax bills still come due unless Congress at some later date defers them. But for right now, those taxes are still need to be paid. People just have a little bit more time to pay them. And the other thing he said is floated another middle-income tax cut, but that, again, would need Congress. And so any plan he comes out would likely more be a campaign pledge than an actual policy that could be enacted in the next couple of months.
I wonder, too, can our government afford any more tax cuts at this point, or do we not need to worry about that right now, Laura, especially?
Stop on euro at 117.906.
Debate right now in Washington, and basically what economists say is they tend to agree that there needs to be more spending, but it needs to be targeted towards the people that need the help. So something like a broad-based tax cut or a capital gains tax cut doesn't necessarily help the people who are struggling right now. Your unemployed workers, your sectors of the economy that are struggling. So in terms of spending money, economists say we do need to spend money, but it needs to be targeted towards places, state and local governments, unemployed workers, things like food assistance that will help kind of get the economy back on track.
What's funny to me is that I feel like the rhetoric is rising taxes. Like, even if we get a President Trump in November again for a second term, it really does feel like we're going to have to raise taxes on the top 1%. We're going to have to raise corporate taxes in order to sort of start making money to pay for all this stimulus. Is that going to happen?
You know, if Democrats gain unified control of both House, Senate, and the White House after the election, that is a very, very likely thing to happen. If President Trump wins or there's a divided split in Congress, less likely. Republicans are still very staunchly against tax cuts. But to your point, looking later down the road, you're looking at, you know, potentially within the next decade or 15 years that Social Security Trust Fund, it becomes insolvent. There's a bunch of kind of looming fiscal issues out there that will need to be addressed, if not, you know, in the next year or two, sometime down the line.
I mean, Laura, generally speaking, what are the best types of tax cuts that really do something for the economy, the U.S. economy?
Well, it depends a little bit what you want to do. So economists say if you want to spur business investment, you want to lower the cost of capital. So you want to give businesses tax breaks for buying new equipment to spur productivity. If you want to kind of relieve the burden on the middle class so they have more money, you know, look at kind of reducing maybe payroll taxes or potentially income taxes there. One of the ideas that Democrats have really gotten excited about is, you know, the idea of a wealth tax. This is on accumulated wealth. This would be a way to kind of tax, because right now we only tax income. We don't tax, you know, wealth once it's been accumulated, a way to kind of hit some of the richest people in the country who are basically paying lower tax rates overall than people who earn and have much less than them.
I guess my question is, do we get around it? That's the thing, right? Like, we can have taxes all you want, but the richer you are, the craftier you can get, right? To get around the taxes. So, like, just because you say it doesn't mean you get it.
That's true, though. I mean, there are some things certainly that will tax the 1%. You know, there will always be creative tax lawyers who are one step ahead of the IRS in figuring this out. But there are a lot of things between raising the rates on capital gains, which is something you know, Joe Biden wants to do. Whether you're looking at raising income rates, whether you're looking at taxing wealth, some combination. You know, doing you know, a financial transactions tax, you know, tax every single stock or bond trade. There's a lot of room to go from where we are in terms of raising more money to where you get to complete total and tax avoidance.
Right. And well, if you think about the folks that are able to lobby most lawmakers, right, to make sure that even when there is tax policy that looks like, oh man, we're going after the rich or the wealthy, yet then there's all these kind of exceptions in it, right, Laura? I mean, this is what ultimately gets written in.
Yeah, that does, and it really depends on who's doing the writing. Democrats have been a lot more staunchly opposed to kind of some of these what they would call loopholes or exceptions, but it really matters, but not only in the writing of the law, but also in the Treasury Department when they go and actually write the regulations to implement these laws. That's when there can kind of be a secondary force of lobbying and different little exceptions or the rules can be loosened or tightened based on who's going in and asking for changes.
What I find fascinating, Carol, is that no one's freaking out about higher corporate taxes under Biden. Like, everyone was super into a tax cut from President Trump, and that like buoyed the market. But like, no one's freaking out about higher corporate taxes under Biden. I just wonder what that's about.
Right. We haven't seen that play out in the financial markets. I mean, how likely, Laura? I mean, do we know if that would definitely happen under Biden?
I mean, hard to say if it would definitely happen, but that is certainly something that Democrats, if they have their way, is something they want to look at raising sort of in the first order. So Biden has proposed to raise the tax rate to 28%. So that's still, you know, right now it's 21%, still lower than where it was 35%, but would be a significant increase.
Yeah, and I think most Americans would say it just needs to be fair, right? I'm just thinking about that. All right, Laura.
It is fair. It's like a deeper psychological conversation.
I don't know. Is there some white, black? Yeah, fair, it doesn't have, there's a lot of gray there. Laura Davison, thank you so much. Bloomberg News congressional tax reporter. Check out her reporting on the Bloomberg terminal and at Bloomberg.com. I do wonder about, though, the things to really get the economy going here, Alex. You know?
Yeah, and I mean, the idea, I mean, a lot of the surveys with the capital gains tax cuts, for example, are indexing the gains to inflation, so you don't have to pay taxes as much. Like, the majority of the studies prove that it has a super minimal impact on GDP, and my point is, at the end of the day, you still need demand.
Right.
In order to start any business, you need the underlying demand to be there to want to do it.
Right, exactly, right? And I think we've got to think about, you know, making sure all the policies are supportive of the economy and getting growth back on track. Let's get back to World and National News headlines. Back on over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Democratic presidential candidate Joe Biden and his newly picked running mate Kamala Harris will be making a joint appearance in Wilmington, Delaware this afternoon. Democratic National Committee Chairman Tom Perez says she is the right pick.
This was a historic day, shattering so many glass ceilings for women, glass ceilings for women of color.
Meanwhile, President Trump is apparently thinking about replacing Defense Secretary Mark Esper if he wins in November. People familiar with the discussion say Trump has been upset that Esper has not been more vocal in defending him on issues like the allegations that Russia paid Taliban fighters bounties for killing U.S. troops in Afghanistan. Treasury Secretary Steven Mnuchin is renewing a push for more limited coronavirus relief of a little more than $1 trillion. He tells Fox they can always come back later in the year and do a sixth bill. He admitted that right now there are no plans for further negotiations, so he could not speculate about prospects of a deal. Former Education Secretary Margaret Spellings tells Bloomberg one area that does need federal and state attention is our education system. She tells Bloomberg too many lower-income children are falling through the cracks due to the inability to access online learning.
We need resources, we need a commitment, and we need economic incentives to create a market to serve rural communities in ways that are efficient and cost-effective.
She says the interruption in learning could result in major losses in income down the road and major declines in GDP. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. Carol Massar, along with Alex Steele, right here on Bloomberg Radio. I love when companies are getting ready to go public and we start to get some insight into what the business looks like, especially those companies that have been private, Alex, for a long time, such as Airbnb.
Yeah, this is a fun fact. Apparently, quarterly revenue dropped 67%.
Not so much fun for them.
Not so much. That's for the second quarter. It fell all the way to $335 million. Now, this is according to people familiar with the matter. But I have to wonder, I mean, Uber was a different beast, clearly, and it was a different market time. But,
Right.
you know, Airbnb seemed to be confirming that they will wind up going public even in this market environment. But I don't know what these numbers, these are rough numbers.
These are really rough numbers, right? And I guess it depends on how much they expect everything to come back. I mean,
how fast, yeah.
Right, but anybody you talk to in the hospitality industry, I mean, they expect it to be slow going. And I don't know if Airbnb taps more into tourism, general tourism, and you know, not the corporate side. And so whether or not I feel like that's going to open up, or already is, before we see, you know, the corporate traveler get back on track. So I don't know if they get to benefit beforehand, but I don't know.
Well, also, I mean, you could make the argument that this would do well for domestic traveling, right? It's like the RV, camper, boats, like these are like the things to do right now because you can't go anywhere. So instead of dropping this money on a vacay, go ahead and drop money on a boat and rent it for a week. Like that's the thing. So in that respect, you could make the argument that Airbnb could really capitalize on that. I guess, can it make up for the loss of that overseas revenue?
Yeah, and listen, they were planning to do this in March, right? And then of course the virus hit, and so they had to kind of back off in terms of their plans. And we do see travel rebounding as some cities are opening, and people, as you say, especially people are looking. I hear more talk about people going camping, going up in the mountains, those destinations where there's lots of space, open air, right?
I'm going to just give a little hint here that I'm going to guess that Carol's not a camper, and I'm definitely not a camper. Like, we're not the RV kind of people. In that, we like comfort. Massage my feet.
I do like comfort, but I do like open air and wide spaces. I will say that.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. U.S. stocks at a record, S&P 500 topping its February 19th closing record. It has surged 50% from that March low. Let's get the very latest as we head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the green with the S&P 500 nearing the all-time intraday high of 3394. Dow's currently up 344 points. S&P's gained 53. The NASDAQ is up 244. FANG stocks up 3.7%. The U.S. 10-year yield at 0.67%. WTI crude futures are up 2.6%, and gold is rebounding, up 1%. Transports gained 97 points, and leaders to the upside in the Dow, Apple, Microsoft, and Home Depot, while Boeing and American Express led to the downside. In other news, the Uber CEO said they may temporarily shut down their app in California, and the Fed's Rosengren said the recovery may be losing steam and needs ongoing support. In U.S. politics, Pelosi says they are miles apart on some issues in the stimulus talks. And wrapping things up, Tesla jumped as much as 15% after announcing a 5-for-1 stock split. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg Times Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. It is Wednesday, halfway through the week. Carol Massar along with Alex Steele in for Jason Kelly. And Alex, we recently noted here at Bloomberg, you actually brought this up on our planning call. You talked about how some companies have been out there to kind of the rush, if you will, for sustainable finance. I think there was a recent bond sale from Google, right? Their parent Alphabet.
Google, Visa, it's sort of like the new trend in the middle of the pandemic. And there is a demand. I think the question, though, becomes, like, do you actually make a good enough return on it versus buying something else?
Ultimately, it's about the returns. In our weekly Bloomberg Green segment today, our Emily Chasen, she's a sustainability editor at Bloomberg News. She's got a look at how long-term investors now hold more sway when it comes to ESG, environmental. I can't remember what that is now.
Environmental, sustainable governance.
Thank you. A momentary break here.
Hey, man, time has no meaning.
Thank you, partner. Let's get into Emily. She joins us on the phone in New York City. Time has no meaning. Emily, thank you. Save me, save me. So what's going on?
Yeah, well, actually, that's a really good start to this conversation, that time has no meaning. We're talking a lot about short-term investors. We talk about long-term investors. One of the things that's interesting in this pandemic is that short-term activists have not really been making the big bets they were, right? Like, the market is pretty volatile. It's pretty risky to take such a big bet. So long-term investors right now actually have a much, at least at big companies, have a much larger influence. And they've been warning for years about all these systemic and workforce issues with diversity and climate change. And so this is kind of like health. This is kind of their moment. So ESG has definitely been surging. And we looked a little bit this week about the tools that long-term investors actually have to influence companies.
So the criticism in terms of, say, the last 6 months with ESG is that the reason why ESG did well is because it's mostly tech. Like, ESG is, you're not going to think of it as an energy, right? And tech is outperforming energy, so therefore ESG performs better. But that's not really because of ESG. What do you think about that?
Well, actually, it's interesting because Bloomberg Intelligence did something this week where they looked at diversity and, like, stocks with more women on boards, and they're actually starting to see divergence for companies that have more women on board. So it's not just tech. And what a lot of the ESG investors have found is that they chose companies that had better management and were more able to pivot or rethink what they were doing in the pandemic as well.
Interesting. So what does this mean then for kind of the ESG world? I do love, though, that the statistics are starting to show, because I feel like we went through a period, I keep kind of going backwards here, but Emily, we went through a period where ESG, people just wanted to do it because they felt like it was the right thing to do, but now it's become much more mainstream.
Yeah, ESG, I mean, assets are just flowing in. We looked at UBS this week. They were out with a note saying that they had seen $71 billion in inflows in ESG assets in the second quarter, which brought their ESG assets to $1 trillion for the first time just at UBS. And they found that 56% of sustainable funds outperformed their peers in the second quarter.
Wow.
So that definitely is happening from there. But then we also looked at annual meeting proxy season just ended. So there's all those environmental resolutions that these long-term shareholders bring. We're actually getting more support as well.
Well, yeah, and then to that, so let's get to it. So these proposals, whether they're social, environmental, or governance, et cetera, what kind of support are they getting? Are they being implemented, et cetera?
Yeah, so it's a really long-term process. It's more sort of the direction of travel and where things are going, and what issues investors want to flag to companies, because these are mostly non-binding proposals, and then the company probably takes a year or so to implement them if they do at all. But anyway, the votes are coming back stronger this year, even though it was an all virtual annual meeting season, so there weren't any climate protests or gadfly and executive spats like there usually are at annual meeting season. So we looked at environmental resolutions, and there were 4 climate shareholder proposals at Russell 3000 companies that received majority support this year. There were none last year that did, so that was a big change. And then the diversity proposals also got a lot more passing rates this year than they had previously.
Yeah, I do wonder what initiative, when it comes to the ESG space, has just gotten, the most, I guess, resulted in the most changes, if you will, and has really brought about changes at companies. Is it diversity? Is it environment? What have we seen, Emily?
Well, that is the million-dollar question, I think, for sure. One thing that has interesting about that is that these social issues often have a bigger impact on stock swings. So if your company has a safety issue or a diversity issue or Me Too issue, that can have a much bigger impact on your stock price than environmental issues, which are sort of slow and steady, and it sort of feels further out to the market. So that's definitely one thing to watch for.
I'm really upset that we didn't talk cow. Oh, go ahead, Alex. What were we going to do?
You're going to talk about cow toots, weren't you?
Yes.
Me
It was
and
the
Jason
one
did that
thing
when I was
after,
subbing for
like
you.
after you first subbed it, and Jason's like, you missed it, man.
You missed the toots. Missed the toots. I only have about 30 seconds left. I just wanted to get your take on the fact that even the environmental proposals, I mean, does it mean that it's less cost effective for companies because they wind up having to put up money to change stuff, and maybe that's why it doesn't get as much traction?
Just got about 30 seconds.
Yeah, environmental proposals are actually down this year, but what it means is that companies are being more preemptive with their shareholders, and they're trying to negotiate, and they've been more willing to issue sustainable finance things themselves on their own accord without so much pressure from shareholders, not having to get all the way to a proposal.
Interesting stuff. I love that stat, though, that the Morningstar finding that 56% of sustainable funds outperformed their peers in the second quarter. Alex, that's pretty cool. Interesting, right? Toots. I was going to let it go, but I'm glad you brought it up again.
Healthy cows.
Exactly. Not so good, though, for the environment. Emily Chasen, sustainability editor at Bloomberg News, on the phone from NYC. You are listening to Bloomberg Business Week. Carol Master, Alex Steele on Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's that time of the day. Alex Steele.
That's why I forgot what we were doing. I was like, what are we doing now? What? No, I totally blocked it out. It's not the song. No, it's not the song guessing game.
Chart of the day. And we're just hoping that there's something that's got a Broadway feel to it. So we shall see. I know. All right. Dave Wilson with us in just a moment, the chart of the day. First up, though, back to your top business stories, a check on the trading day. We've got just about 29 minutes to go, Charlie Pellett.
I thank you very much. The big question for the song of the day, will it be a record? Here's what's going on. We have got the Dow, the S&P, and NASDAQ all advancing right now, with the S&P up 45, up 1.4%, bringing its year-to-date gain to 4.6%. The Dow is up 298 points, up 1.1%. NASDAQ up 215 points, up by 2%. As for the why for all of this, stocks surpassing the record high reached before the coronavirus pandemic, propelled by surging technology shares. Gold is rebounding today, the dollar weakening, and Treasury yields rising to 5-week highs. Lots going on. The 10-year down 8/30 seconds, yield now 0.66%. Gold up 0.6% at $19.23 the ounce, and West Texas Intermediate crude up 2.3%, $42.59 a barrel. American drivers are returning to the road after months of coronavirus stay-at-home orders, with revenue from gasoline and diesel taxes nearing pre-pandemic levels. The government collected more than $3.8 billion in fuel taxes in July, up from less than $2.2 billion in June. The levies merge into the Highway Trust Fund, the primary financing tool for highway and transit projects. Among some of the oil names representing a swath of the oil industry, today ExxonMobil down 0.3%, BP up 1.7%, EOG Resources down 1.1%, and Pioneer Natural Resources up today by 3.1%. The Los Angeles businessman whose tip ignited the biggest U.S. investigation ever into a college admissions scheme may learn within the hour whether his bet to cooperate with prosecutors paid off. Maury Tobin is scheduled to be sentenced just about now in federal court in Boston on an unrelated pump and dump stock scheme. 3:33 on Wall Street. It is time now for the Small Business Report with John Tucker.
Regina Vaughn operates Freshy Food, a franchise in West Lafayette, Indiana, and Purdue University is the source of her customers. She was closed for a month because of the pandemic. After students were sent home in March, how was your small business impacted, Regina?
The college town is kind of called the ghost town right now, since probably in mid-March. We don't even make 75% of the revenue that we were seeing come in, even in the summer when the months, the students aren't as heavy there during the summer, but still we have summer school and camps.
What's the situation with Purdue University for the fall term?
They did open back up the last of the summer school, and then supposedly there's on track to open August 24th for person-to-person classes or online classes.
There's still a great degree of uncertainty. In the meantime, you have international students at Purdue University as well, who've basically been stuck at campus. They haven't gone home. Has that been a regular source of income for you?
Yes, they have still been coming in and ordering quite often, so that has helped me, besides, whatever government help I have received.
In terms of revenue, are you able to sustain the business with the changed revenue model that you have?
So if they open back up and they stay open, I think my revenue will go up a bit and I can sustain that. If Purdue opens back up and they have an escalation of cases and they close in, 2 months or 3 months or whatever and send everyone back home, I just don't see me being able to sustain, even with international students being here. It just is too much.
All right, Regina Vaughn of Freshie in West Lafayette, Indiana. Thanks. That's your small business report.
And we thank you, John Tucker, recapping S&P up 1.4%. I'm Charlie Pellett. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Yes!
Don't fail us now.
He picked one I knew. Crazy for you, Madonna. Quite clearly, if I couldn't get this, you just throw me out of the building. Dave Wilson, thank you. We only peer pressured you for a while on this one. Thank you for doing a song that I knew from Madonna that may or may not have been a karaoke song for me.
Oh, really?
Well, I mean...
Oh, wait a minute. Dave, this just took a turn. I'm just going to say.
Yes,
in my early 20s, let's be
because you're
clear.
talking that kind of a karaoke song. I will tell you, I once went on a business trip for Bloomberg to Asia and won a karaoke contest among the Asian stock team in a Tokyo bar singing Blitzkrieg Bop by the Ramones.
Why does that not surprise me? That is so cool.
Yeah, absolutely.
So, Dave Wilson, chart of the day. I'm crazy for you. Investors
know
are crazy for the market.
Yeah, exactly. There are a whole lot of people that are crazy for stocks, considering we've seen a record for the S&P 500, at least on an intraday basis, beating its close from February. And, it shows up in the options market, specifically with equity options. And that's what the chart focuses on. Because, I saw this tweet yesterday from the Sentiment Trader financial blog that took a look at what's called an equity put-call ratio based on data out of CBOE Global Markets, or CBOE. And it's based on, comparing the number of contracts in essence, to lock in a price if stocks go down relative to the number traded that lock-in prices allow people to benefit when stocks go up. So what's happened is this put-call ratio on a 50-day moving average, so in other words, you're looking at 10 weeks of trading basically, has been coming down really for the most part since stocks have been rising back in March. And so what's happened now is you've got the lowest reading since October 2000, according to our data. 2000. That ring any bells? At the height of the internet-driven bull market of the 90s and then the aftermath. So we're kind of getting back there. It's another indicator that shows you that, if you're looking for comparisons to where we are now, 20 years ago, you can find them. And it's showing up in the options market. Basically, there's not a whole lot of fear about where stocks are headed. That's what this option signal is saying. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I do wonder, though, Dave and Alex, I think if it's different, though, because there's, go back to the tech bubble versus where we are. I mean, in terms of the stimulus that's out there, whether it's the Fed or from the government, I do wonder if that makes it a little bit different, Dave.
Well, it's different, though, because I was singing karaoke back then, which I don't do now. So that really is the big change.
I bet she does at home. Brings out the hairbrush. Dances with her daughter.
She tells me to stop talking.
I know, Dave, you were trying to answer, and we didn't give you a chance.
Sorry.
You will be back later on, though, and we'll talk some more. All right, Dave Wilson, always so patient with all of us. Let's get back to World and National News headlines. Back on over to Nancy Lyons. Hey, Nance.
Hey, Carol. Joe Biden is making his first appearance with newly chosen running mate Kamala Harris this afternoon. The former primary rivals will appear together at a high school in Biden's Delaware hometown. Congressman Eric Swalwell is hailing Kamala Harris's selection as Biden's running mate. He says they both came from the same district's attorney's office in California's Alameda County.
That office had a creed, which was, we don't seek wins, we seek justice. And I think that has defined her career, especially as Attorney General during the Great Recession when consumers in California were being defrauded by banks. She sought and received a large judgment to help people during very tough times.
President Trump has already called Harris the meanest and most horrible senator, but he did give her more than $6,000 in campaign donations when she was running for California Attorney General. The Kentucky Derby is still set for next month at Churchill Downs, but officials expect less than 23,000 fans will be able to attend due to an updated health and safety plan That plan now eliminates general admission and standing room only areas. And the Masters will be played at Augusta National this year without any fans, another concession to the coronavirus. Sumner Redstone, who built a media empire from his family's drive-in movie chain, has died. He was 97. Redstone built his operations through aggressive acquisitions. He made headlines concerning his multiple wives and the firing of stars and top executives. He also vowed in multiple interviews he would never die. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Alex Steele. We're going to talk a little bit more about Sumner Redstone and the media world a little bit later on. But right now, we're going to talk Wall Street bonuses because they're not going to be necessarily what everybody expects.
Yeah, this is a great article, a great piece from Sonali Basak, who did some really good reporting that basically looked at the bonus pool. And the bank traders have done so well. They've been responsible, in essence, for elevating revenue at all the big banks, but yet their bonuses just might not match up because of the pandemic. And they're like, guys, this is not fair. We support you through the pandemic. We want a piece of the money. Whereas the bank's like, hey, guys, what are you going to do? We're in the middle of a pandemic. No bonuses.
Don't you
cuts.
Right. Do you think about if you're a trader and you went through kind of years or periods where there was like nothing happening, the markets like there wasn't any volatility and you didn't do really well in terms of bonuses. And so here they've had volatility. They've done really well, as you said, and really helped out the bottom line for their banks. And yet they're not going to be rewarded. It's pretty remarkable.
And they'll be rewarded somewhat. Like they'll still get like maybe a bonus that's up like 20, 30%, but they thought they would get a bonus increase of like 50% or maybe even more. So it's hard to feel a little bad. But the significance is if they don't like it, where are they going to go? The buy side. And they're going to go to certain hedge funds that are doing well or some of the boutique firms. So there is a talent risk here if Wall Street can't deliver.
And if you think about the numbers that the banks, came forth with during the second quarter, traders at three top fixed income trading houses, JP Morgan, Citi, and Goldman, generated about $10 billion in additional revenue. I mean, that's real money.
Yeah, yeah. In an arm that's been a drag for the last couple of years, and they were responsible for supporting it. So I kind of see both sides, although it's kind of hard to argue like, oh, too bad your bonus is 30% and 50%.
What's your bonus this year, Alex Steele?
Exactly, right. When there's like how many people on unemployment. But if there is a talent reshuffle, that could actually be pretty interesting and reflect more on sort of where we go on the street.
Yeah, we'll see what what happens in terms of movement around, but definitely a different tone and certainly something that we know always trends high among the most read on the Bloomberg. You're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stick around to find out if the S&P 500 index climbs to a record. The number to beat, 3386. Yes, we've got a decimal in there, 0.15. Right now, 3382 on the S&P, up 1.5%. The Dow is up 318 points, up 1.1%. NASDAQ up 229, up 2.1%. Bottom line, S&P 500 index at or near a record. Stay with us right through the closing bell, and of course, find out how Asian markets react tonight. Stocks did briefly surpass the record reached before the coronavirus pandemic, propelled by surging technology shares. Gold is rebounding today. Right now, we've got gold up 0.3%, 19.17 the ounce. 10-year, the yield 0.66%. Treasury yields, by the way, 5-week highs. S&P up 48, up 1.5%. The Dow up 317, up 1.1%. And NASDAQ up 229, a gain there of 2.1%. West Texas Intermediate crude up 2.3%, 42.58 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close. Joining us once again, Brian Yackman. He's Chief Investment Officer, Portfolio Manager, and Lead Manager of the YCG Enhanced Fund. The fund, by the way, in the 96th percentile over the past 5 years, returning nearly 12% on average annually. Brian, based in Austin, Texas, and that's where we find him on this Wednesday. Brian, great to have you here, have you back on Bloomberg Radio. How are you? How's your family doing? How's your work family doing?
Man, we're doing great. Both family and work family. I feel a little bit bad to say that, but during such difficult times, I'm actually really enjoying the family time and just being around my wife and children more.
Yeah, I've heard that a lot, Alex. I don't know how like it's just, I know you're back at work, but that kind of bubble feeling a little bit.
Aw, it's cute. I had mixed feelings about all those things. Brian, do you have mixed feelings about the market at record highs?
Oh, well, yeah, this is a crazy time. I've never seen anything like it, nor has anyone. I'm sure you keep hearing that a lot. And I'd say it's definitely a time to invest with care. And I'm not saying it's dangerous just because there's so much economic and political uncertainty, but just the fact that there's so much speculative fever running rampant out there. It is a casino out there.
God, that doesn't sound too good. Because we know the house always wins.
I'm referring to like the Robin Hood effect, right? Like, so Robin Hood, they went into free trading, and then it led to free trading at all these other online brokerages to be competitive. And there's, with gambling and sports down, where do you turn to? Well, this seems to be the most popular place to now gamble. You look at Charles Schwab as an example. They're 6 times larger in assets than Robinhood, but Robinhood has twice as many trades on a daily basis than Schwab.
Yeah, but isn't that a little simplistic? Because I look at the S&P and I look at the last leg of the rally that we've seen in the last 6 weeks. It's been led by industrials, materials, and financials, and that's a pure recovery trade. That's we're going to get a vaccine or we're combating the virus in an efficient way. We're going to buy the recovery stocks, the reflation stocks.
Yeah, and that's true. But the thing that I guess keeps happening is just so unpredictable that it's risk on, risk off, and it just keeps going back and forth because the reality is nobody really knows how this will shake out in the next few weeks, months, and even in the next year. The reality is there's still fear out there. The virus is still out there. And so long as there's fear, it's leading to a whole different dynamics of the marketplace.
Right, but then I think the problem is if you just invested with fear, that you'd miss the rally that we saw, because then you'd be buying big tech, well, I guess you'd be buying gold, so you might have a nice run of it, but you'd be buying, treasuries, and you'd be buying big tech, and that's what got shaken out. So how do you, as an investor, deal with the macro versus the reality of what we're seeing in the market?
Well, rather than trying to predict the directions, I think the key is, as an investor, you are buying ownership in a business. So the key is to focus on businesses with proven business models, and particularly they need to be conservatively capitalized so that you know that they'll survive. You don't want to buy into something where the bondholders of today become the shareholders of tomorrow, right? So you just want to make sure that things are going to work out over the long term on the businesses you choose to own.
Well, let's talk about some of the names. You're always so good about, because you guys are buying names and, putting names into your portfolio. Let's talk about some of the names that you like. And I know one of the bigger holdings is Estee Lauder. Talk to us about that brand.
Sure.
And that stock, yeah.
As you know, we're always looking for global champions, and Estee Lauder is certainly one of those. They're the number 1 or number 2 spot in prestige beauty in over 40 countries. So huge market share in the prestige beauty. And, they're right in the fire as well, because obviously they're being affected. You pointed out the software side or some of these other businesses that have this recurring revenue stream being more protected. Of course, Estee Lauder is being hit, but, this is a selfie generation, and people are still getting on Zoom calls, and they're taking photos, posting on social media. People want to be at their best and look their best. And so traditionally, what's been a challenge for Estee Lauder was they were primarily coming through the department store channel. Over the years, they've declined from over 50% in the department store channel to under 40%.
Right.
And what happened was airports became the new malls. Well, obviously, it's a ghost town in both those places, department stores and airports. But the management's smart. I mean, they're dedicating 75% of their budget towards digital marketing. So they're adapting. And online sales are growing super rapidly. It's over 15% now. I think the point is whether it's direct to consumer or whatever channel it is, this is a disposable good that's a short repurchase cycle, and people are going to seek out their desirable brands.
I'm just going to say, I had an aunt who worked at Estee Lauder for a long time. They have become brilliant and have been for years now of buying up smaller and really popular kind of in brands. And so it's not just about the Estee Lauder, brands, but it's about Bobbi Brown and everybody else that they've bought. And that has helped them tap into a younger generation. And let's not forget, Brian, I mean, the margins on some of that stuff, it's unbelievable.
Yeah, you're actually reminding me of when we first bought Estee Lauder several years ago, when it was getting hit hard. And
yeah, they went through a tough time.
I remember coming home to the family dinner table, and I told my children, we bought some Estee Lauder stock today, and my teenage daughters, Talia and Sky, they said to me, they're like, why are you buying Estee Lauder? That's a terrible makeup brand, which I thought was funny to hear from them. They're like, you should be buying into MAC. I was like, well, that's owned by Estee Lauder.
Exactly.
Oh, and Dad just crushes the teenagers. But my question is, who's going to come up with a mask-resistant foundation? Because if you can do that, you win everything.
My mask is full of makeup stuff.
Yeah, no, I mean, that's what I'm saying. Like, if you can make a mask-resistant foundation, they should get on that whole thing. But what I think is interesting is that if you look at the track record, over the last month, that fund is up by about 3.4%.
Yeah.
And year to date, they're pretty much flat. And then the last year, they're up by about 12%. So, there are opportunities that don't have to be Facebook.
Right. And they've been really, pretty open, Alex, about kind of their more recent performance. I know longer term they've done well, but it's been tougher, in this environment, right, where people are just chasing some of those big tech names. So good to check in with him. Mask resistant foundation.
Right? No, seriously. I mean, that's and lipstick. If that could happen, you'd be a bazillionaire.
Isn't that called waterproof kind of ish? I don't know. Not so much, I know.
We have to discuss it.
All right. Our thanks to Brian Yackman over at Yackman & Company.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Wednesday, August 12th. Folks from Aware Asset Management virtually ringing that closing bell. U.S. stocks closed just shy of a record, briefly surpassing the high reached before the coronavirus pandemic, propelled by surging technology shares. Gold rebounded today. The dollar weakened. Treasury yields now at 5-week highs. The 10-year now at 0.66%. S&P 500 index did advance as much as 1.6%, ended with a gain of 1.4%, up 46 points, now at 3380. The high, the record, is 3386. The Dow up 289 points, up 1%. NASDAQ up 229, higher by 2.1%. Gold down $1.10 the ounce at $19.10. West Texas Intermediate crude up 2.3%, $42.57 for a barrel of West Texas Intermediate crude. As for the market environment, specifically the trading environment, Brian Yachman is Chief Investment Officer at YCG Investments. A moment ago here on Bloomberg Business Week, he minced no words.
This is crazy time. I mean, I've never seen anything like it, nor has anyone. I'm sure you keep hearing that a lot. And I'd say it's definitely a time to invest with care. And I'm not saying it's dangerous just because there's so much economic and political uncertainty, but just the fact that there's so much speculative fever running rampant out there. I mean, it is a casino out there.
Tesla shares surged 13.1% today after that 5-for-1 split, a move the company says is designed to make the stock less expensive for individual investors. And the CEO of Uber Technologies has threatened to temporarily shut down service in California if it loses a drawn-out fight over a state law seeking to reclassify contractors as employees. Today, Uber down 1.2%, Lyft down 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Your next move will be your last.
Nobody move a muscle.
Damn, Sippy, you got some moves.
Time is money. Let's go. Come on, move it. Shake it up.
Shake it up. Bloomberg Business Week. Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
Yes, indeed, everybody. Time to do some moving and shaking on this Wednesday. Take a look at some of the stocks on the move. Carol Masser along with Alex Steele. Jason Kelly is out this week. Quick check. Big picture. We heard Dave Wilson kicking off our broadcast a couple of hours ago talking about this broad-based rally. So if I look at the S&P 500, Alex, 343 names higher today, 162 lower. But we really saw almost all of the major industry groups in the S&P 500 show gains. There's 11 of them. The only one that lost a little bit of ground, financials, down about 0.3%. But information technology, healthcare, consumer discretionary, utilities, they were at the top of the pack. So
Yeah,
pretty.
Financials is so weird, by the way, because yields are higher. But whatever, let's just put that aside for a second. But when we also forget is that when we talk about tech really leading the rally, with the exception of the last few weeks, tech isn't just Apple, Facebook. Tech is also things like Advanced Micro Devices and Qualcomm and NVIDIA. I mean, NVIDIA is really considered part of the FANG names, too, when you talk about those stocks. And they all were the outperformers within the S&P today. AMD had a note out from D.A. Davidson. They talked about sort of the presence of how many processors are in different data centers, and that's good for the chip makers. So AMD got a nice boost. NVIDIA as well. They're also going to report earnings this week, so that's up on that news.
I love watching the chip names, and we've got a great guest coming up that we're going to talk about once Lyft comes out, Lyft earnings. But Dan Morgan over at Synovus watches that chip sector, so we can maybe talk to him a little bit about that. But you're right, AMD, your number one gainer in the S&P, Qualcomm, number 2, and NVIDIA, your number 3 gainer. So it was like clear across the board. I want to go to the flip side of the ledger. Carnival, watching that, your number 2 decliner in the S&P 500, and Carnival was down just about 4% in today's trade. And we know we did get some news this week about Carnival and their plans for delays in terms of getting ships back into the water. We're not talking about in the U.S., but Germany, Italy specifically. And we did have some analysts weigh in, Morgan Stanley in particular, maintaining Carnival at underweight, cutting their price target to $10 a share from $11. So not a big move, but percentage-wise, rather significant. And we know Carnival, this is a stock that's down 70% this year. They've been selling assets, they've been raising money, but you do wonder what the outlook is, certainly into the rest of this year and next year. I mean, cruise ships, it's a lot of people in a small space. It's tough.
Yeah, as it is, that's not my jam. But also remember that Carnival had a really solid rally this week as well, at one point hitting its highest level since mid-July. So, Lyft, there we go. Lyft is coming out right now, beating estimates, really. Second quarter revenue, $339.3 million. The estimate was for $334.5 million. Well, that's interesting.
Yeah, let's just take a quick look at what the stock's doing in the after hours. Let me just bring it up here. And Lyft in the after hours, initially we're seeing it a little bit lower, but it's early on, so we'll wait for a little bit more of that trade to settle in. You mentioned revenue. Second quarter adjusted EBITDA loss $280.3 million, estimated loss of $292.6 million. Active riders during the second quarter, 8.7 million roughly. Estimate was for 10.5 million. So no surprise to keep that light. Have you been using Lyft or Uber?
I do Uber.
You do? Like to go home and stuff?
Yeah. To go home. I've never used Lyft. I just commit to one and do it. But
Right.
What's interesting, you mentioned active riders, missed estimates, but the revenue per active rider was actually about $4 higher than had been expected. So, which makes sense because if you're not going to drive everywhere, you don't want to take the train. What are you going to do?
Right. And I do think,
Uber, Lyft.
right. And I think if you start either using Lyft, right, or Uber, and you feel comfortable with them and you feel safe, that you're going to continue with that as well. And again, I just want to do a quick check on Lyft again in the after hours, see if we are getting any more movement. It's now up about, now it's up. There you go. It must be listening to you, Alex. It's up about 2.4%, 2.3%. So maybe looking at individual users and what they're in terms of how much they're using Lyft specifically. Cisco, I just want to get to real quickly. Saw that they came out as well. Cisco, fourth quarter revenue, $12.2 billion. That's a beat. $12.08 billion was the estimate. And also talking about the forecast. Sees first quarter adjusted EPS, 69 to 71 cents. The estimate out there, though, is for 76 cents and sees first quarter revenue down 9% to down 11%. The estimate was for a decline of down a little bit more than 7%. And you're right. Ouch. The stock in the after hours is down more than 4%. Quick check on the VIX. Let's pull it up, if we may. The volatility index report on this Wednesday. VIX down almost 7.8%, closing at 22.16. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson! Dave Wilson. Mr. Wilson, here with the stock of the day. What was your pick?
Builder's First Source, Alex. It's a producer, distributor, and installer of building products. They're used in new homes and apartments and also in repair and remodeling projects. Builder's First Source was founded in 1998, went public in 2005. The ticker is BLDR. The shares traded for less than $1 each back in 2008 when the U.S. housing market was collapsing. Since then, they've soared more than 40-fold. And as a result, Builder's First Source's market value this month rose to more than $3 billion, putting the company in the mid-cap category as defined by S&P Dow Jones Indices. And now the index provider has named Builder's First Source into the S&P Mid-Cap 400 Index. That selection was made late yesterday. The company will join before Monday's opening bell, and that means funds that track the Mid-Cap 400 need to own shares, and those using the index as a benchmark have a reason to perhaps follow suit. And the index effect was enough to carry Builder's First Source's shares to a record. They closed with a gain of more than 12%.
Not too shabby, huh?
Not too shabby at all. Jinx.
I mean, you think about it. Home builders have done really well this year, and a company that, their biggest market is home builders, you'd figure would do well too, and that's how it's playing out with Builder's First Source.
Yeah, there's a little bit of logic there in the market, certainly with that one. Dave, thank you so much. Really appreciate it. Dave Wilson, our Bloomberg Stocks editor, with his stock of the day, and of course, check out his chart of the day in case you missed it earlier. All right, coming up, we're watching Lyft in the after hours. We're going to break it down. In the meantime, let's check in on world and national news headlines. For that, let's turn things over to Mark Mills in the Bloomberg Newsroom.
Thanks, Carol. Former Vice President Joe Biden and Senator Kamala Harris will make their first appearance as the Democratic ticket for president and vice president later today. Delaware Senator Chris Coons, a close advisor to Biden, says Harris gives the ticket a big boost.
President Trump and Vice President Pence had a very bad day yesterday, and their flailing initial attacks on her suggest they don't quite know how to take on Senator Harris. And I think the Vice President, Mike Pence, will have his hands full on the debate stage this fall with Senator Harris.
Treasury Secretary Steven Mnuchin renewed a push for a more limited pandemic relief package of a little more than $1 trillion, saying the Democratic demands for spending $2 trillion or more can be delayed till later in the year. Mnuchin told Fox Business Network we don't have to do everything at once. Presidential advisor Kellyanne Conway says Democrats will look bad over these failed negotiations.
I think they're going to blame the Congress because they saw Congress absent from their job most of the last several months. They're voting virtually. They're not here when they do show up.
Governor Phil Murphy will give New Jersey public schools the option of an all-remote teaching situation when classes resume in September.
Districts that cannot meet all the health and safety standards for safe in-person instruction will begin their school year in an all-remote fashion.
Sumner Redstone died Tuesday afternoon at his home in Los Angeles. The New England cinema operator who became a billionaire media mogul late in life after buying Viacom, Paramount Pictures, and CBS Corp. was 97. No cause was announced. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark, thank you so much. You are listening to Bloomberg Business Week. It is Wednesday. Carol Massar along with Alex Steele. Yeah, I love a story. You just shared it with me. The race is on to be the Peloton of weightlifting. You know, Jason and I love to talk about Peloton.
Yes, I've never been on a Peloton. Have you been on a Peloton?
I actually have one.
You have one? Sneaky. Is it the not the
It's the
running
bike.
one?
It's the bike.
one.
It's the bike one.
Okay.
Yeah, and it's pretty cool. And we've talked a lot with John Foley over at Peloton. I mean, I think their model is pretty amazing, and they have shifted a lot more towards digital to kind of open up how many people can kind of access their platform. So that's been a big boom for them, and a lot of people buying Pelotons during the shutdown.
Totally, which leads us to this exact story. It comes from the Times, and talking about how to basically be the dumbbell of the Peloton world. So you have smart machines, cheap dumbbells, put them together, put them in your home. And we've seen some startups here that have come onto it, but these can really cost you like $3,000 for the so-called smart strength training device. But apparently it packs a weight room's worth of equipment in one machine that's the size of a poster.
That,
which I found amazing. It's a
like,
tonal.
It's a tonal, right? And you said it's about $3,000. Yeah, I mean, I think we're seeing a lot more, of this, whether it's the Mirror, whether it's Peloton, of these devices. But it's interesting too. If we're watching Peloton, right? Because they now have a treadmill, and I do wonder how many more types of kind of equipment-based kind of virtual workouts are they going to embrace?
No, it's such a good point. And like, how far is it for them to go from that machine to a weightlifting machine? I have no idea. But if they're already in it and they already have sort of the market to it, then why don't they just go into the weight room world?
You love to work out. If you could put, like, I don't know, certain kinds of equipment in your house, what would you do? Or maybe you already do.
No, you kidding? 1,100 square foot apartment with a 6-year-old? No. I would do I would do reformer,
just hoping for you.
Pilates reformer, and I would do a treadmill. That's what I would do.
That makes sense. I know whenever we travel together, you're always like, I find you in the gym on the treadmill.
Yeah, so are you.
But I don't do it as much as you do. All right, you're listening to Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Couple of high-profile earnings reports after the closing bell. Cisco delivering a lackluster sales forecast for the current period, a sign that businesses and government agencies are spending less in the pandemic-driven recession. Cisco Systems says revenue will fall 9 to 11% from a year earlier in the fiscal first quarter, which ends in late October. Shares of Cisco Systems trading lower now by just about 5%. Lyft also reporting after the bell. Based in San Francisco, it reported better than expected revenue and losses in a second quarter marred by the coronavirus pandemic. The company still maintains its forecast for a quarterly adjusted profit by the end of next year, even with at least 20% fewer rides than previously anticipated. Lyft again up by 3%. An update for the Dow, the S&P and NASDAQ stocks briefly surpassing the record that was reached before the coronavirus pandemic. S&P up 46, up 1.4%. The Dow up 289, up 1.1%. NASDAQ up 229 points, surging 2.1%. 10-year yield 0.66%. Gold up 0.3%, 19.17 the ounce. West Texas Intermediate crude oil up 2.3%, 42.58 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you very much. Alex Steele in for Jason Kelly. Carol, have you been in a Lyft recently?
No.
No, yeah.
Not since like March.
But wow, but you've been really sequestered in Jersey.
Yeah,
that's
very
part of
much
it.
so, yeah.
Well, that stock is sort of reverberating after its earnings. Bad, sure, but maybe less bad than we thought. Let's break it down more with Dan Morgan, Vice President and Senior Portfolio Manager of Synovus Trust Company. Dan, always a pleasure to talk to you. Do you like Lyft?
Well, it's interesting, Alex, because this is kind of a mixed report. Hi, Carol. In terms of the numbers, obviously a beat on revenue. Also, I was encouraged by the fact that the EBITDA loss was not as great as what everybody had originally expected. We were looking for $300 million loss. They did about a $280 million loss. But I did notice somewhat of a miss in terms of active riders. They came into 8.69 million. The estimate was 10.5 million. That was a 60% drop from what we saw a year ago. And Alex and Carol, I think it's kind of a redo of the Uber report last week, except for Lyft doesn't have Eats.
That's right. That's so right. No, well, I mean, we talk about Lyft and Uber often in the same sentence, but they're different beasts.
Well, they really are, Carol. I mean, if you think about Lyft in terms of their kind of multi-mode platform initiative that they call it, which is bikes, it's scooters, it's autonomous vehicles, and that's still kind of coming along, right? Yeah. But then we think of Uber really delivering very strong growth on Eats. They did the Postmates deal in terms of that acquisition that should help them going forward. So definitely two companies that are very different. Lyft more domestic, doesn't have Eats. Uber more international, doesn't have bikes and scooters. It looks like Uber, though, at this point in time is a little bit better position.
But I wonder, do we learn sort of, Dan, what's actually priced into these stocks when earnings come out, for example?
Well, Alex, you look at Lyft, the stock, went public in the mid-70s. It's trading half that price, right, in terms of valuation. Yeah, so it's a kind of a punch in the face for Lyft. Again, it's really hard to do any sort of really big matrix works on this just because of the fact these companies don't make money. I thought it was kind of surprising, guys, that they still held on to that fiscal year, fourth quarter end 2021 with positive EBITDA. I thought they might back out on that a little bit just because of the conditions we're in right now with COVID.
Yeah, exactly. Just looking at the stocks in the after hours, Lyft is up about 1.2% here in the after hours. Uber is just up about 0.3%, so call it little changed. Lyft is down about 29% so far this year. I mean, I don't know. Is Lyft and Uber, for that matter? I mean, Uber, I got to say, we've used Uber Eats, unfortunately, a lot since the shutdown, but that has certainly maybe helped them out a little bit. But do Lyft and Uber become more of a 2021 story again, Dan, in your view?
I think so, Carol, because, you think of these, basically the tech sector as whole is up about 24-25%, right, year to date. And these two stocks have really been lagging, right? So if you own them, you haven't been doing as well as, let's say, owning Apple, right, which has done fabulous. So I think you're right. I think this is something we got to look to for next year to see if this so-called EBITDA positive can materialize. if they can get to the light at the end of the tunnel and deliver, obviously everyone's going to be very happy. But Alex and Carol, I think it's going to be a lot more drawn out than people think. I hate to say.
I'm sure a lot of investors would agree with you, especially when we take a look at California, too, and the law that their employees there have to be categorized. Their drivers have to be employees. They can't be gig workers, which means it's going to be more expensive to operate their business, which means supposedly more higher prices for the riders. We even heard Uber potentially, I think it was CNBC reported earlier, that they could pull out altogether, say, of San Francisco. How do you look at that risk?
Well, AB5 is huge in terms of impact to both Lyft and Uber. This is something that's been out there for a while. Then we had the judge came out a couple days ago and really put the hammer down on both of those companies, right? And right now, if you think about it, about 9 to 10% of total revenues come out of California for both Lyft and Uber. And really, they're all hanging their hat on this Prop 22, right, which is going to come up in November, where they're going to put it to the voters in California and say, hey, you know, we want to be classified differently and not be under AB5. So it's going to be a battle here going into the fall to see if they can win out with this Prop 22 and then whether the courts will overturn Assembly Bill number 5. But it's definitely a huge risk, and it hurts their ability to become EBITDA positive by 2021.
Yeah, there's definitely going to be a legal overhang, I think, until there's more resolution on this. But it really does feel like it's going to be a game changer when it comes to their business. Dan, we always love talking with you. Dan Morgan, he's Vice President, Senior Portfolio Manager at Synovus Trust Company. They've got roughly $24.3 billion in assets under management, joining us once again on the phone from Atlanta. You know, I do feel like, right, until there's some resolution, maybe a little bit more resolution, this is going to be tough for them, Alex.
Yeah, and it's a material thing, too, also in September. I think it's September 12th. There's going to be a ruling in London to see if Uber can be allowed to operate there or if it's going to be sort of banned. And that's going to be huge, particularly for, you know, any kind of international expansion. And do other countries go the same route if they want to protect their own taxi drivers?
I remember talking to a London cab driver last November, and they're like, yeah, don't like these guys.
Yeah. And apparently it's a lot more expensive because when I go there, I don't take Ubers. I just take the regular cabs. But anyway, that's
Isn't that interesting? Yeah.
Different story. That's what I've been told to do. So whatever. We'll see.
All right. For those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week, Alex and I are going to be back. If you're listening on Bloomberg 99.1 in D.C., Sun On with Kevin Cirilli is coming up next. And coming up next, we're going to do kind of a deep dive into the world of media. Some stories, of course, looking at Sumner Redstone of Viacom and his passing, and also looking at the world of Disney and how it's changing. This is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up the next 90 minutes, we've got a mega dose of media news, including the passing of billionaire media mogul Sumner Redstone. So we'll dig into his impact when it comes to Viacom and really the world of media more broadly. First up, though, let's get a check on some of the news after the closing bell. Here is Charlie Bartlett.
Thank you very much. We begin with the world of earnings. Lots of them after the closing bell. Let's begin with Lyft, up 3% right now on the stock. It did report better than expected revenue and losses in a second quarter that was marred by the coronavirus pandemic. Dan Morgan is senior portfolio manager at Synovus Trust. He was our guest moments ago right here on Bloomberg Business Week.
Obviously a beat on revenue. Also, I was encouraged by the fact that the EBITDA loss was not as great as what everybody had originally expected. We're looking for $300 million loss. They did about a $280 million loss. But I did notice somewhat of a miss in terms of active writers. They came into 8.69 million. The estimate was 10.5 million. That was a 60% drop from what we saw a year ago.
San Francisco-based company still maintains its forecast for a quarterly adjusted profit by the end of next year. Also out after the bell, Cisco Systems. It delivered a lackluster sales forecast for the current period, a sign that businesses and government agencies are spending less in the pandemic-driven recession. We've got shares right now of Cisco down by about 5.8%. Goldman Sachs is seeking to acquire General Motors' credit card business, doubling down on consumer banking and betting on a future where people will pay for gas, takeout, and groceries from the driver's seat. Sources tell Bloomberg the Wall Street firm is among a small number of bidders for the automaker's credit card business, which has about $3 billion in outstanding balances. Goldman Sachs shares up today by 0.5%. General Motors down 1.7%. Stocks briefly surpassed the all-time record reached before the coronavirus pandemic, propelled by surging technology shares. S&P up 46, up 1.4%. The Dow up 289, up 1%. NASDAQ up 229, up 2.1%. 10-year down 8/32, yield 0.66%. Gold up 0.4%, 19.19 the ounce. And West Texas Intermediate crude up 2.3%, 42.58 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So if you think of the iconic empire builders in the world of media, Sumner Redstone definitely comes to mind. We got the news today, of course, of his passing at the age of 97. Bloomberg News anchor Bob Moon takes a look at the life and legacy of the former cinema operator turned billionaire media mogul.
He was born Sumner Murray Rothstein in 1923 in Boston, where the family's West End apartment had no toilet. His father, who ended up changing the family surname to Redstone a few years later, went from selling linoleum to managing restaurants, nightclubs, and movie theaters, including the first drive-in in New York, where young Sumner worked the snack bar.
It's time for a tasty and refreshing snack. Let's go!
From those humble childhood beginnings, he would see himself honored a few years back with a star on Movieland's Walk of Fame.
Today, Hollywood honors Sumner Redstone.
He had risen to head the world's fourth largest media conglomerate, Viacom, including Paramount Pictures, which he won after a lengthy leveraged buyout, and some of cable TV's most recognizable brands, including MTV and Comedy Central. He also owned the bulk of the most watched television network in America, CBS, and video game maker Midway. He built it all from his father's collection of drive-ins, going on to virtually invent the multiplex theater and building the business into an entertainment empire with more than 1,000 movie screens around the world. The Bloomberg Billionaires Index ranked Redstone the 90th richest American with a net worth in excess of $5 billion.
Money, and I mean it sincerely, has never motivated me. The passion to win has motivated me.
That passion to win, as he titled his autobiography, saw Redstone through a Boston hotel fire in 1979. He survived hanging from a window ledge with a severely burned right hand, then battled back from third-degree burns over half his body. He graduated first in his class from the Boston Latin School, landed a scholarship at Harvard, and during World War II helped decode intercepted Japanese messages for the U.S. military. After the war, he sold surplus Army goods to help pay his way through law school. And as he recalled during a lecture at Boston University, he eventually took a job with the U.S. Justice Department.
That was one of the greatest and most intense experiences of my life. I must have argued 60 tax cases, and I was forged into one of the country's top tax lawyers then.
Good training for what was to come. He gave up the job and took a 95% pay cut to head his family's theater business. Redstone put his law background to work, though, bringing or threatening to bring legal action against those he felt infringed on his business rights, including a victorious case against the major Hollywood studios for restraint of trade in 1958. Having built his theater empire, he gained control of Viacom in 1987 in a $3.4 billion leveraged buyout.
That was the most important move I made, because without Viacom, there would have been no Paramount, no Nickelodeon.
Who lives in a pineapple under the sea?
No MTV.
Come on, let's get out of here, Beavis.
Hey, let go.
No CBS.
You help me, and I'll help you.
So that obviously was my most important and proudest moment.
He never forgot, though, having to ignore some intense criticism along the way from analysts and investors.
I listened to Wall Street a lot, but Wall Street told me I overpaid. Wall Street told me to sell MTV and Nickelodeon. So in your life, in the final analysis, you have to follow your own instincts.
And his instincts told him one thing.
Content is king. All the platforms, all the devices, all the channels, all the technologies in the world would be worthless without content. Stories, songs, programs, games, films, and so on.
His self-made man outlook was echoed in an interview a few years back with Bloomberg Television.
Why should I be weighed down by the naysayers? There are always naysayers, and there are always risk takers. I'd rather be a risk taker than a naysayer.
He once told Businessweek magazine he didn't waste time worrying about his legacy. Legacies, he declared, are for dead people.
And of course, that was our own Bloomberg News anchor, Bob Moon, on the life and legacy of Sumner Redstone. But you really think about those iconic CEOs, right, who kind of grew up within an industry, and Sumner Redstone, Alex, is definitely one of them.
Yeah, Tara LaChapelle, a Bloomberg Opinion, has a really great piece. Everyone should read it and say how he really paved the way for the guys that in the sphere now, like Elon Musk, Mark Zuckerberg, Jeff Bezos. So even he hates the word legacy, but yet that outsized personality, that key man risk sort of situation living on in those names now.
Right, and it was just incredible to kind of hear Bob go down the different brands, whether it was, of course, Viacom, Paramount, CBS, like just all of it coming together, right? And you do see that that's kind of the playbook that so many of these guys do nowadays.
Yeah, it would have been really interesting, too, like if Sumner Redstone was younger now, what he would do with streaming. Like how he would transition that. If he wants to win, right? How do you win if you're a CBS and you're competing against Netflix? It has a shot, right? But like, how do you do it?
Yeah, exactly. Well, coming up, we're going to have more on Viacom and Sumner Redstone, who really did really shape our current media world. And we've got another CEO, too, who's putting his own mark on another iconic media brand. So we'll get into that in just a moment. Right now, though, let's get back to World and National News headlines. Back on over to Mark Mills in our Bloomberg newsroom. Hi, Mark.
Hey, Carol, thank you. Former Vice President Joe Biden and California Senator Kamala Harris are due to make their first joint appearance as the Democratic Party ticket for the White House this afternoon in Wilmington, Delaware. Democratic National Committee Chairman Tom Perez is bullish on the ticket.
Joe Biden and Kamala Harris are two of the most optimistic people I know, and you're going to see that optimism.
The White House is painting the Biden-Harris ticket as moving far to the left. White House economic advisor Larry Kudlow says there are big differences between the two parties over tax policy.
He is a tax cutter in direct contrast to the Biden team, which are tax raisers. They want to raise taxes $3 trillion. That would destroy the economy.
Senior advisor Kellyanne Conway was asked about Trump saying yesterday that Kamala Harris is, quote, nasty and horrible.
All those words are said by all of you about people like me.
The cancellation of fall sports by the Big Ten and Pac-10 conferences will sideline 40% of major college football teams. The chairman of the Pac-12 CEO group, Michael Schill, says they took the advice of medical advisors and other factors into account.
We include California, Utah, Oregon, Washington, Colorado, big variety of states. We don't even have the permission of government authorities to play in some of those areas. And the spread in some of those areas is quite significant.
Governor Phil Murphy will give New Jersey's public schools the option of all remote teaching when classes resume in September. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark Mills, thank you so much for that update. Carol Master along with Alex Steele, and this story caught your attention early on, and I love that we're doing it because, you know, the emerging markets are often dealing with some different issues, but I also feel like the emerging markets often lead the way when it comes to setting policy or how we do things. And so this story in the New York Times involves a company called Zomato, and I hope I'm saying it right. It's a global food delivery company. It's based in India, and they've got a new policy, and basically it's a paid leave policy for women when they have their period.
There's nothing I don't love about this story.
Which is what you said when you were sending it around.
Totally.
You're like, we're going to do this today, right?
And we're doing it because it's me and Carol. Because if Jason was here, he'd be weird. He might have some good moments. But anyway, so basically you can take, I think, 10 days, not 12, but 10.
Yeah.
And you can take the time off, and you can do it online, and you can contact HR right away if you get any flack or feedback. So if you have stomach pains, cramps because of your period, you can actually take the day off. What I found so interesting is that it was India, not like a progressive developed market, right? Like an emerging market setting this kind of policy where you don't necessarily think of it being female dominated in any kind of real way.
Well, but you know this, right? These emerging markets, India in particular, there's a taboo, right? And it's that women, you see this women facing discrimination, superstition, sanitary supplies remain unavailable or unaffordable, and access to really safe and clean toilet facilities. These are all barriers in managing really being a woman, right, and going through your menstrual cycle. And so this holds them back. It holds them back with education. It holds them back from being involved in the working world. So this is a huge step forward and really a progressive policy.
When I was telling a male colleague this earlier today, like, well, do the men get 10 days off for other stuff?
Are you kidding?
I was not kidding. And then we got into a different debate about stuff. But anyway, that was the response on those ends. But maybe it also helps raise awareness, to be honest.
Absolutely, and a big deal, especially in some of these emerging economies. So a must read, and thank you, New York Times, for doing it. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, keeping an eye on shares of Cisco Systems and Lyft. After hours, shares of both companies are now trading lower. Lyft initially was up after the report, but right now on the Bloomberg, looking at a loss of 1.7% in shares of Lyft. It did report better than expected revenue and losses in a second quarter that was marred by the coronavirus pandemic. Also out after the bell, Cisco Systems. It gave a lackluster forecast for the current period, a sign that businesses and government agencies are spending less time in the pandemic-driven recession. Shares of Cisco continue to slump. They are down now by almost 7%. It was an up day on Wall Street with the Dow, the S&P, and NASDAQ. S&P 500 index up by 46 points, higher by just about 1.4%. Dow Jones Industrial Average up 289 points. That is a gain of just about 1%. And NASDAQ higher by 229 points, up by 2.1%. Just want to pass along a headline involving Lyft, literally breaking on the Bloomberg right now. Lyft does say it may suspend service in California if it is forced to reclassify its employees as full-time workers. We got a similar announcement today from crosstown San Francisco rival Uber. 10-year yield 0.67%, gold up 0.2%, 19.15 the ounce. West Texas Intermediate crude up 2.2%, 42.54 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. We want to talk a little bit more now about Sumner Redstone. We talked about how he hates the idea of a legacy, but he still leaves one whether he likes it or not. Joining us now is Chris Palmieri. He's Bloomberg News Los Angeles bureau chief. He joins us now on the phone. Chris, how you doing? Good to see you.
Good, thanks.
He hated the word legacy, but he still has one. What is it?
Well, he's one of the kind of classic media moguls of the kind we really don't see much anymore. If you look at Reed Hastings, the founder of Netflix, very different personality. We may talk about Bob Chapek, the new CEO of Disney, same thing, very much a manager, not a swashbuckling character like Sumner Redstone. He was larger than life, and he assembled this media empire, and he had a catchphrase he said all the time: "Content is king," and that's proven even more so when we look at the tech companies trying to get in this video space, the experience video companies launching new streaming services. At the end of the day, you need a hit show or a film.
Yeah, comes down to that ultimately. What's interesting and fascinating, Chris, about Sumner is he kind of was larger than life. And I feel like that what was going on inside the company, what was going on outside the company, we were all kind of fascinated by it all.
Right. And, of course, you could argue whether having a personality like that was a good thing or not. He was famously mercurial. He fired his CEO, a couple of them. Even fired Tom Cruise sort of publicly when he didn't think his movies were good enough. It's hard to imagine that same sort of approach today. But I was thinking as this going over this news today, how would Sumner, because he was obviously in a diminished state the last few years, handle these current sort of tectonic shifts that are happening in the media business with streaming taking off and people canceling pay TV? And, he was the guy who started out in drive-in movies and, ended up amassing this huge portfolio of cable TV channels. How would he be handling things today? It's a question we'll never know the answer to, but it's fascinating to think about.
I totally agree with you, and particularly because in some ways the shift to streaming happened quickly, inevitably, but quickly. And this ties in also to a great, wonderful reporting that you did on Disney. The title is "Disney CEO Jettisons Once Sacred Businesses During Pandemic." And it just speaks to how quickly these traditional media companies have to shift what their priorities are and shift how they're managing stuff in order to compete with Netflix, Amazon.
Right. So Bob Chapek was sort of a surprise choice in February when he got picked to succeed Bob Iger. There was, he was always kind of a candidate, but kind of a dark horse. There was other people who thought, might be like good candidates, including Kevin Mayer, who was running their streaming service at the time. But Chapek is a company veteran, and what's interesting about him that role, he not only knows so much about the company, having worked there for 30 years, but he also kind of took a tack that many people who are veterans might not take, which is to immediately start axing some of these businesses that were kind of pet projects, including prior management. I'm talking about English schools in China, and he even canceled the Disney Channel in the UK. And they had spent $1 billion developing these things called magic bands in the theme parks in Florida, which were these wearable technology that used as sort of room keys and theme park tickets. And all that is gone in the last few months. Even the Frozen musical on Broadway, not even put on hiatus. And so it just shows a willingness to make, to kill your darlings in a way that perhaps not even an outsider would have been so aggressive.
So is this good or bad for Disney's future?
Well, in a way, you could argue that Chapek is the right guy at the right time. I mean, Iger has built up this behemoth through all these acquisitions, culminating last year in Fox, $71 billion deal. And he sort of said as much that, he was handing over to a guy who he felt could run all this. It wasn't necessarily at this point about making big acquisitions. It's just keeping the strategy that they put together, invest heavily in streaming, migrate everybody to this new business, and make everything work together. The theme parks, the cruise ships, TV stations, the movie studio. So Chapek, in a way, is sort of the right guy at the right time in this crisis because he's a cost cutter and he knows how to get everybody to work together and think creatively.
Are we going to get into a place where these big media companies trim down too much and we're going to be looking for hey, we really wish we had that huge diversified model where we had all these things that now we don't have because we tried to streamline it?
Well, there's sort of still too many people chasing this Netflix dream, and not everyone's going to win. And so with the pandemic and the hit that they've taken to their businesses in terms of TV advertising, the people that own theme parks are really punished. The movie theaters aren't open. So it's forced them all to really sort of accelerate their thinking on where they're going with this. The spending is still continuing on the streaming side, and I don't think the real rationalization in that has come yet. There's still a lot of money being thrown at TV shows, and that'll continue as soon as they can start production again.
I do wonder, Chris, if it's just going to be this dynamic duo. I know that Bob Iger wasn't on the last earnings.
Okay, ladies and gentlemen, time's up for today. I will cancel this order to sell short euro. It looked like it started going down, and we'll see what's going to happen tomorrow. So stay safe. All of you guys who followed our trades today, we did not bet, £500, it's still okay. And I'll see you all tomorrow. I'll speak to you all tomorrow, as always, from 8 o'clock UK time. Okay? Have a great evening. Bye for now.
Person, and he's going to stay in that role till December of next year, he said, and I fully believe he will.
Well, interesting to see kind of the changes, but I got to say, when it comes to brands, Alex, this is like a killer one.
Oh my
with
God.
Everything that's under, especially when it comes to content creation, and they just leverage it across the platforms.
It's really quite brilliant. Although you have to make the argument that they need the new content. You need the new content on Disney Plus, like Baby Yoda. We're moving on from that now.
Did you watch Hamilton? Have you seen it?
I did. It was wonderful. It was tremendous.
It was incredible.
Talk about musical theater awesomeness.
I know. I kind of knew the answer there. Chris Palmieri, LA Bureau Chief, Bloomberg News. Alex, you have to leave us. I'm going to miss you, but I know you'll be back tomorrow, so have a really good evening.